you will find that the emperor is not as forgiving as I am.
I couldn't help it.
No.
I had to do it. Hey, anybody got any other quotes for the May the 4th?
You deliberately disobeyed me.
I did. What is my fate, Darth? Okay, how long are you going to do that, Royce? If that's what it takes to get my paycheck every week, okay, Dad.
Don't ever call me Dad.
No.
I'm going to call Maury Povich and ask him who the father is. Is it Darth?
Turns out that was a lie.
We cannot do this anymore.
That was a lie. That's right. All right, I guess he's going to keep it up there the rest of the rest of the day. His arm's going to get really tired. Oh, there he is.
It's our new podcast guest.
That's right. We have 5 here this week, not just 4.
Yeah.
All right, I'm Darin with Arbitrage Trade. This is After the Bell. Another fun week, another unpredictable week, and I'm thinking this weekend a lot of stuff's going to happen, but we'll talk about that a little bit. We have Daniel Hopwood on your top right. He is the ex-institutional wealth manager. And we have Josh Morgan, JPM, Josh Morgan, JMP, JPM. And then we have, sorry, Josh. And then we have Royce, a.k.a. Darth Vader, down in the bottom right. Who was the actor that did that?
James Earl Jones.
There we go, a.k.a. James Earl Jones. I didn't want to get the wrong one. So
Mufasa.
We'll do that on a future one. Hold it, save it. All right, that's enough. Let's move on. All right, so the market today, let's get through this. We've got, it turned all green. That's why from now on, I'm going to try, if I remember, my background lighting, if it's a mixed, it will be green and red. If it's a red day, I'm going to have red in the back. And now, as you can see, it is all green. We had an all green day, which happened towards the end. It was red earlier. It was mixed earlier. It did all kinds of crazy things, kind of like the last, month or so that we've been just craziness. Let's go ahead and start with the market. Let me get the numbers. I had the numbers. Where are the numbers? Boom.
No
right.
numbers.
Then I'll let you do your thing, Daniel, because it didn't change too much. It honestly did not this time. I mean, yeah.
I know. I was surprised.
I know.
So the Dow on quite a bit, but
yeah, the Dow was up 0.7%. S&P was up 0.43%. And the NASDAQ was up 0.27. Bitcoin did end up at 96.7. It could be moving pretty good right now. And then the Dixie did, as you said, bounce right around the at 100. And so I think it was like 99.93 or something when I looked. So here we are. That's the recap of where things are. Again, didn't change too much from what you said, but let's get it started on your agenda, Mr. Bitcoin Applehead.
So the market had a 9-day up streak, which is the longest winning streak since 2004, which is honestly like pretty impressive, but also one of those things that once again is kind of bear market activity. Regular market 3 to 5 days green, 3 to 5 days red, little less red than green, and then just kind of does that Elliott wave trickle up. But that was driven in part due to the Vanguard S&P 500 ETF saw nearly $21 billion in inflows last month. So retail has been buying this dip pretty much like crazy, which is, if I want to put on my Darin conspiracy theory hat, is the perfect time for the market to continue to go down to kind of rug everybody out of this. I think
my hat will fit, Daniel. It'll fit. Go ahead.
Okay. Yeah. I mean, I have a big head, but I feel like you might too. So it'll.
I do. I do.
So I think the interesting thing is that the S&P has kind of been floating in between this 50-day and 200-day like moving average area. And honestly, I was expecting a move out of that channel come, the Fed talking, and it's just kind of stayed there for right now. So I'm kind of like, so the market is still like indecisive of where it wants to go. But I think we'll kind of get into some things where the numbers aren't bad right now, but the potential future looking numbers are, a little shaky. I don't want to say bad, but they have the potential to be shaky.
Yeah, it's a decision basically that has not been made yet, and that's what's going on right now. I mean, today Trump said something about he is not going to back off of his tariffs with China, but he also said that right before Besant, I've still heard it today, even two different analysts say it both ways, that he is going to be going over to Sweden to meet with China, and that so it's like this is purposeful. Talk about jawboning. That sounds like jawboning from Trump. Is that he said he's not going to back off the tariffs, but Besant's going over there to try to strike a deal. So there's just a lot going on. And I think that's why the markets are staying right where they are for the most part. They're just too scared to go one way or another now. And the markets actually know that they're overbought right now. They're even saying that a lot. So it'll be fun to see where we go from here. You mentioned ISM manufacturing, right?
Mm-hmm.
Go ahead and tell us what you said about that.
Yeah, so it's reported lower than expected, and it's for the last 2 months in a row, it's contracted. And that's normally an indicator of, when manufacturing has a slowdown, especially in China, it's at the lowest level it's been in 2 years. It's typically, at least like a market slowdown indicator. I don't want to necessarily say recession just because manufacturing has slowed. It hasn't gone to zero, right? But it can typically be an indicator of when, consumers are pulling back because companies aren't ordering as much because they don't see the demand. But some of the, interesting aspects was that the consumer was still strong. I think we talked about this last week, but it was getting softer. And I think this will probably change as people's Temu orders double in price. We'll see a change in how consumers. But my favorite fact that I'm surprised Darin didn't bring up is that Charles Schwab had thousands of margin calls last week, the most since they've had since 2022. Which we remember what happened then. We were in 9 month to a year long kind of bear market. Something's brewing.
That never happens.
There are things happening that also happened right around the whole bank crisis time. I think isn't that when that was? And there are some facts and figures out there that are pointing towards that. And I won't get into Fred again, but that's where you find that information. And then you talk about oil and copper prices being lower, and we'll talk about that when we hit this Fed thing here in a minute. But you guys want to add anything about the overall market right now, or we'll move on? Anything at all?
No? I saw Josh smiling. I want him to say something positive for us.
Oh no, I was just going to go on a whole different tangent.
Yeah.
We can move on.
Okay, maybe we can bring it out of him later. He's saving it for later.
Yeah.
All right, we did talk about Warren Buffett last week, and we were talking, and that was before he retired, I believe. And then right after that, it was announced that he was retired. So we were talking about all that cash that he had, etc. So everything that we were saying that he was doing for the purpose of, and I think we even mentioned that it was because he is going into retirement. So that has happened now. So give us a start on that, Daniel, about the GOAT, as you put it, Warren Buffett.
Yeah, obviously everyone was talking about his retirement this week, and just looking at his numbers since 1965 when he took over Berkshire, which was just a textile company at the time. I don't have the exact number here, but over that time he had like a 5 million% return. And it equated to, over the time that he's been managing Berkshire, 19.9% a year, while the market has only done 10.4%. So it's just like pretty crazy return for a guy who just started, kind of buying companies, didn't have some fund backing back then in the way that companies do now, and built it to, a $1.1 trillion conglomerate. And it's just a very impressive investment track record pre any, computers or anything, sophisticated. If you've ever seen the interviews of him in his office, it's like, a newspaper and a TV he has. I wouldn't be surprised if the man doesn't even know how to pull up a quote. He probably just calls someone to do it for them. So,
Yeah.
he leaves his successor with $350 billion to invest. So we'll see what that guy can manage with that kind of money.
I just think that maybe he possibly had a lot of rich friends around the world, and they talked a lot before things happened within company. Sort of like, insider investing. But I mean, I don't want to take down the GOAT like that. Let's.
Yeah, Darin, don't take down the GOAT like that.
I don't want to
Jeez.
suggest anything like that. Like these trade rooms and trade meetings and trade conferences. All right, Josh, anything to say about the GOAT?
Well, yeah, I mean, just the one thing is kind of anecdote, or I guess one thing that's gotten kind of buried about with the whole Buffett retiring is one thing he actually came out and said was he is encouraging investors to actually kind of spread their wealth out away from the USD. For the first time in 60 years, he's recommending you kind of get away from the dollar. And we've talked about the pizza indicator, the magazine cover indicator. How about the Buffett retires and recommend you run away from the dollar indicator? That is, to me, a giant red flag that we should I think is kind of getting buried in a lot of what's happening right now.
It's intentionally buried. You know that, JPM.
Here, Josh, do you want some fun numbers on that basis that I've been looking at?
Oh, yeah.
So guess what country year to date, if you were to look at the MSCI ETF that tracks by country index, which country has been up the most?
You mean since when?
Year to date, since the beginning of the year.
Japan.
I thought it was the euro.
I thought it was Euro too, like UK or I don't.
Oh, sorry, no, year to date's last 12 months. It's Poland at 45%.
Wow.
We have Spain coming in second at 32%. And then we have Greece, of all places, which I remember 10 years ago was defaulting.
Bankrupt, yeah.
28%.
Wow.
So you're talking about the increase in their currency, the percentage?
No,
of their
this
currency
is if you're so this is their iShares MSCI Poland ETF. So tracks, the Poland market, probably the equivalent of their S&P 500.
Oh, okay, got it. Poland,
Cool.
I would not have seen that one.
Yeah. I don't think anyone
yeah.
saw Poland as being the
No.
the pick of the year.
Those crazy Polish people. Hey, Royce, anything to say about the GOAT before we move on?
Well, nah, I'm just gonna leave it. I'm gonna wait.
Okay.
I'm gonna wait.
Cool. All right. So let's next thing we got to talk about is job numbers. I don't even know why we have this as a topic, because if you believe them, then go right ahead, Daniel. What you got to say?
If you believe them, go ahead.
Why would you start with that? As I'm about to
There's a very good reason. It wasn't too long ago we had that. They admitted that job numbers were terrible. So go ahead.
All right. Well,
Leading in.
we added 177,000 jobs, which was higher than the expected 133,000, but it's also below by 10,000 of what we had the prior month. But the kind of concerning thing, because those numbers actually look pretty good, is that initial jobless claims have jumped more than expected. There has been an increase in only a small increase in private payroll this year when it comes to job openings. And then things are starting to slow when you look at, if you're going to start factoring in trade war, Doge job cuts, which will be coming up in, once their payments are done in the coming months, and then a tighter immigration policy. So, as Darin would like to always point out, that there may be some revisions coming to those numbers. So, we'll have to see how those goes. But I thought that, one of the two interesting facts is I saw some interesting charts that showed when the consumer or the Conference Board of Consumer jobs showed a potential unemployment increase is that it was always a problem, i.e. meaning that it always foreshadowed a big unemployment spike. So, there are some leading indicators that, the forward jobs market is worse than projected as the great financial crisis, which I find a bit hard to believe that that's something like the great financial crisis is going to happen. But is unemployment about to go up? I think that one's probably a bit inevitable.
Yeah, I think I've even heard today a couple of times, even they even admitted on the, MSNBCs and stuff, or CNBC, that 4.6 is the number they're throwing out now. And they're also looking at a rise in inflation, therefore a possibility of a cut coming up. A little small cut is what they keep hinting at. So it's interesting times coming up. And I think when they start cutting, that means it's a bad thing pretty soon. I mean, we've been saying that for a year, but I think it'll be a bad thing when they start cutting. That means they have to for bad reasons.
Well, cutting's never a good sign, and we know this Fed is great at being behind the ball. So,
right? You mean listening to the people that tell them when to cut? Oh, I mean, all right. So you said, talk about the GDP, and then we'll recap on that. So the GDP was contracted, and you know what? I have a problem with that. They love to say GDP rose, GDP went up, GDP blah blah blah, but they hate to say it went down. They say it contracted. Just for all the people who may not understand what contraction means, that are the everyday people out there, this little slick and sliminess that they have about, it contracted, it didn't go down. All right. So anyway, go ahead.
All right. Well, for those that don't know, contracted means it went down. You need a dictionary on the word contracted. So GDP went down, as Darin would like to say, in Q1, only by 0.3%. But that is kind of big when you're considering the fact that it was an expected increase of 0.4%. This is likely kind of a result of math of how things are calculated. So when you bring in more than you sell, that hurts GDP, right? Because it shows that you're not selling as much as you're bringing in. And that's pretty much companies pulling forward inventory to avoid tariffs. So it makes that number look bad. Now, the thing is, if we contract or go down another consecutive quarter or two, then it's an actual indicator of how things are going, right? Because you could chop this up to, it's just math of people anticipating, tariff issues. But if GDP continues down, consumers just continue to spend less, even though the inventory is here, and then that's not a good sign.
Yeah, let's see if this administration tries to redefine the word recession like the previous one did. The two in a row. All right, so I'm going to do in the Fed today. Here are some one-liners about what happened and what was said, and then we'll just let everybody talk about it if you have anything you want to say. First of all, the Fed said these following things, what I call, yes, Royce, jawboning. But here we go. We got the higher inflation and unemployment rise. That's what they think it will elevate. They also said the economic activity slowed. They said unemployment is stabilized, if those numbers are correct. And they said inflation is somewhat elevated. QT will continue. And Fed decision was unanimous this time. There weren't anybody that had a different viewpoint. Let's see. And that they will be attentive to risks on both sides of the mandate. So after I threw up, I wrote that down, and that's what it says. So anything there that you guys want to add on to? I mean, all of it that we just talked about, GDP, the Fed.
Well, I kind of think there's like a coming storm in the next few months, because like
Darin wants to believe
tie all of this together, like what we've talked about with the with the negative GDP, was primarily due to everybody hoarding things before the tariffs kick in, and I think a lot of people are still sort of betting that tariffs are just a negotiation tactic, even though at this point, I don't think we've reached a trade agreement with any of these countries that, at least to the degree that's been publicly announced. The biggest issue to me, though, is going to be the worst case scenario for the Fed is if like tariffs continue to push inflation higher, which is seemingly likely because he's not backing down from these tariffs. It seems like these things are going to go into effect. So if like 2 or 3 months down the road, when this hoarded inventory starts to run out, then it's going to start squeezing a lot of these small businesses that can't absorb the cost of those of the increase in prices. So then you're going to get those inflation, then you're going to get the unemployment numbers up. So then Fed has a double whammy of, do I cut rates because unemployment is so high that, we obviously need to kind of jumpstart the economy, or do I keep rates at, the 4.25, 4.5 that it's currently at to continue to fight inflation? And so then they're kind of in it's a catch-22 scenario that I really don't know what's going to happen, but I do see that kind of playing out, assuming that we don't get some sort of relief from the tariffs, assuming that Trump's not just, playing chicken with everyone's 401k.
401ks have only existed about 44 years, right?
Yep.
So I mean, if they went away, not even one generation would miss them.
Yep. And I think there's a push towards that, Royce.
You also think there's a lot of companies that are kind of building on this generational wealth transfer of all of these like baby boomers that are dying off and are going to start leaving their 401ks and 403bs and all their retirement and everything to this next generation. And a lot of people are kind of banking on that and counting on that. And a lot of business has been built on the idea that we're going to see an influx of cash to like the Gen X and Gen Z and millennials at some point. And so, if all of that money disappears, that is going to be a serious economic hurdle to get past.
But where's the money now? I mean, the money should be deployed in the system, right? It should be in the market. So it won't disappear, except people might actually cash out and put it someplace else, which could cause the market to crash.
Right. I mean, you keep saying things, and all of this sounds bad.
Nah, it sounds good. I like it. I mean, hey.
Guess what I keep hearing now?
Yeah. Don't own anything. Everything should be in a trust. But I'm not a financial advisor. This is not financial advice.
See, I'm getting there. That's what they keep. That's one of the whispers. Actually, it's not a whisper anymore. They keep saying on these shows is ETF. It's like, okay, yeah, so you can play more with what you have in the ETFs and do whatever you want to do with them. Yeah. Okay.
Yep.
Darin, I think you need to go outside and touch grass.
I do. You see, I'm getting red here.
Some of those grounding sheets.
It's blood pressure. It's sun that I've gotten, and blood pressure, and it's kind of hot in here. All three, and it's just a sauna. Let's go to world peace. You said it's coming. Is that what you're saying? Hey, everything's gonna be fine.
I wrote this, and then later in the day, I saw a clip on Twitter of someone asking Trump, like, what about like India, Pakistan? He goes, oh, like, let them fight it out. Why do we got to get involved? Let them figure it out. And I was just like, wow, that's like sad and also incredible content.
Yeah.
So I mean, this it started out in my mind as, the U.S. and Ukraine signed the minerals deal. So we are kind of gonna. I don't think it's totally official yet, but we're gonna have a joint investment with them, which gives us kind of exclusive access or first access to their rare earth metals as a repayment for us for supporting their war. China and are probably going to start talking with the U.S. Because their economy is starting to hurt, and we know this because they cut repo rates, they trim reserve requirements for their banks to kind of boost the market and increase liquidity. But then, of course, I think in the Middle East, things have gotten a little wonky. In India, Pakistan, things have gotten a little wonky. so that kind of curbed my world peace aspect of it. But maybe are we about to get a little bit less wars in the world potentially? But we also just added another one. It sounded like so. Yeah, I'd be curious on your guys' take of what's how the world is going to impact everything coming up.
Okay, as we move on to that, I just want to say that Trump made a point this week to say, and he also talked about the percent thing and all that, but he made a point that he's got an announcement that he's going to make. He's like teasing everybody, saying that I have a really good announcement to make between Thursday and Monday. So the timing of that, the timing of that really is funny. It's going to be when he's going to be, his people are going to be over in Sweden talking about China. But he also put this disclaimer in that comment saying that, but it's not necessarily about trade. So, I mean, golly, let's talk about just uncertainty. I mean, he's throwing that in, and I think the market jumped when that came out as well. So, I mean, it's like a bunch of things being said to keep the market afloat right now. All right, so you were talking about, you want these guys to talk about world peace? Anything they want to throw in there about world peace, what we just talked about?
Yeah, just like the macro landscape of that could affect what's going on, right? Do we think we're coming for a World War III?
Notice you haven't seen Zelensky lately.
These trade deals and kumbaya.
Yeah, I haven't seen Zelensky on TV in a while. Have you? I haven't seen Zelensky. Where did he go?
Well, he kind of ruined his one appearance he got, and I don't think anybody wanted to invite him on their show anymore.
And then you got the Pope being picked here, like right now. They're all together. What do they call it?
Do we have any smoke yet? Any smoke?
What is it called?
No, it was black today.
Which, by the way, Cheech and Chong's Up in Smoke. They got a new movie coming out. Anyway, that has nothing to do with it.
No.
And that's
I know what I thought was really good virtue signaling of the Pope is when he died. I saw an article that said but he died with $100 to his name. I was like, yeah, but doesn't the Vatican manage like an undisclosed billions of dollars? I was like,
yeah,
that's like a lot of rich people's tax returns. It says he only has $100 to their name.
Absolutely.
Josh, anything? While he's frozen, he's back now. Josh, anything? World turmoil? Another black swan? You said I like to say it.
I mean, I really don't. There's just, again, we keep using the term uncertainty, and there's just, for so long, I mean, for years and years and years, before we, really the last 4 years, we've had kind of just a market other than, past 2022, that's just gone up and to the right. And now that has completely been thrown out the window. And I think that from a world economic stability standpoint, that's exactly that's what's happened also. And for the administration that came in saying that they were going to, they were championing lower prices, and I'm not the president that starts wars, I'm ending them. There sure has been a lot of increase in prices and increases in wars since all of that began. And I don't think, trade wars, real world wars, I don't know. And it's, there's a lot of data out there, and depending on where you look, you can get pointed in one direction or the other. And that's again, kind of just goes back to the whole uncertainty of the whole issue. I just don't know. And it's a frustrating place to be. It was a lot more fun, back 2 or 3 years ago. And you're just we're probably fine. The odds of it going, up and to the right are pretty good. And here we are now where it's and you look at it from just even the markets in general. We've got, I think we talked about what copper and oil prices dropping, which typically indicates a weakening economy, not only domestically, but globally. But at the same time, we talked about how we've got this influx of hundreds of billions of dollars into a tech heavy ETF, which means, so are we back to just investing in, speculative companies or growth companies? What's the top of the S&P? Or are we back to, okay, let's tighten the budget, and because we've got potential, recession fears again. And so it's just half of the people that you talk to are hedging their bets on this, and half, the other half are hedging their bets on that. And so there's not an answer out there. So you just kind of
beg to differ.
Oh, here we go.
All right, Royce gets the last word, but I think I saw on CNBC, they said we're only 8% down now from the high. I mean, we're still going up and to the right. It's just we're having some jumps down.
But we're still 8% down.
Yeah.
Huh?
We're still 8% down.
That's what I'm saying.
Yeah,
though.
but
we
we're
were
still
20.
like
Yeah,
like 4% or like 4 times overvalued of like the S&P average.
Yes,
exactly.
So,
Like the
so
S&P
it's like all the like earnings compression we did is like we're now just like back to kind of where we were before. It's like
exactly.
oh well, like that correction didn't really do anything. I just want to
Right.
say something real quick before Royce goes. Is just on Josh's point. If it's any indicator of how things are, you know, you talked about oil and copper being like a recession kind of indicator. On the news today of the Fed not doing anything, which you could say is no news, and you know it kind of like pinned the market. It didn't really react one way or another. Is that copper was down 2.5%, and oil as well was down 1.7%, and oil is already very low. It's at $58 a barrel, right? So if those are any kind of forward indicators, and I just rechecked, we're at 225 days out from the yield curve reinverting. So, you know, just adding more bad news to the mix.
Yep. All the indicators pointing that way. By the way, you got to have what I heard today also is that Trump's trying to make everything happen right now, take the pain now, so that there's gain later. And he doesn't want to have that he doesn't want things going downward when it comes to midterms. So it's still political. So he's trying to pain for the gain thing right now.
He has to do this, and he has to compress all of this into 2 years.
Yes.
Because otherwise you're going to get a big blue wave when we get to midterms, and he's not going to have the support that he has. And so he won't be able to get these things passed. And so if he doesn't get passed with flying colors, and this whole, you know, approval rating doesn't flip, and we don't start seeing our, you know, 401k is going back up into the green, then everybody's going to be like, this is not what I voted for. And so let's even the playing field.
All right, Royce, bring facts, figures, and math into this.
I have nothing to bring except indicators.
Here you go.
So
that's facts, figures, and math.
All right. So on our nightly run, Arbitrage basically processes a whole bunch of data every single night. And basically we try to keep our finger on the pulse of what's going on, right? Well, recently, like within the last 2 weeks, like of the 9,000 plus stocks that are out there, close to 4,500 of them are at the very bottom of the arbitrage band and have started moving up. That typically means there is a bull market coming. Like basically this was just a dip. It was, if you bought the dip at the beginning of April when we were at the low, basically you're already up 10-15%. And the funny thing is basically because this is just beginning over here, looking at the weekly time frame, if you go up to the next time frame on those same stocks, the weekly is saying that basically another bull market is being born. And on the monthly chart, they've moved so far up and down, it's created a V shape. And as far as we can see, it looks like we actually are going into another bull market. So maybe the trade war is working. Maybe they're changing the trade routes. But as far as the overall stocks, like I'm saying, we follow the market. We don't try to predict the market. And the herd of stocks currently are pushing towards a new bull market.
But it's just the timing. It could be 3 to 6 months. So that's the thing.
No.
You're saying the weekly is set up now?
The weekly is set up. The daily is set up. And like probably within the next 2 to 3 weeks, we should be well within a bull market.
Okay, so the crash is about to happen, and then in 3 weeks we're going up. No, that's. I mean, you can't lie about what he just said. I mean,
all we're doing is following the herd, like with those heat maps that basically that used to exist out there. It's like we see like the entire. I mean, it's kind of scary to see over 5,400 of 9,000 stocks all sitting at the exact same spot in the system and poised to go up. They just have to make it past their support and resistance line.
Well, and it kind of begs the question is like when we had, was there an element of smoke and mirrors to all of this? And did we get to where, because we had talked about, months ago, how heavy tech was and like how extremely overbought everything was. And so, and then we talked about how you have to have buyers that come in. So we got retail finally came in at the peak. They got in, everybody else offloaded, started selling. We saw all that pressure dropping everything down. Then you throw in the tariffs and all that in, and now is everything cooled off to a point where are we going to see, the whales and the big guys coming back in and, starting to buy up. And now that they've sold at the peak because retail came in and actually gave them the buyers that they needed. And then we get all the smoke and mirrors and the narrative that comes out for the next, for the last 2 months it's happened. Now we've kind of bottomed out. I mean, I know we're still sitting at like 29, 30 PE on some of the, on like SPY, but could that be, enough that now everybody's, the big guys are coming back in, and are we going to see that bull run? And I wrote that down earlier. And if Royce is saying that, a lot of indicators are pointing that direction, then it could be, it could very well be that.
Or just move to the other 493 stocks. And those are the ones that are going to pull off the bottom.
No, those ones are boring, Darin.
Underdogs? Yeah, no, sorry.
Those are not the ones where you hang on every word on their earnings calls. Like you don't,
It's because they have to pay for all the shorts. So that it's all those that have been shorted are now going to get the rise because they finally have to give up and take their profit.
What are you talking about? It's been rising for literally over a month now.
Yeah,
since the beginning of April all the way to where we are.
That's what I'm saying. So then we're in a bull market. You keep saying bear market, but we're in a bull market.
People think it's a bear market rally, but no. From where we're sitting, the Z Pro is where it needs to be. The arbitrage band is where it needs to be. And Atlas is saying, with our parabolic SAR, everything is where it needs to be.
Yeah, that actually begs the question, Daniel. Where are we sitting with the 200-day on?
That's what I've been saying every week.
It.
Yep, still below it. So where is it though?
We've traded above it, but we haven't closed above it.
Right, exactly.
So right now, I mean, we're I don't know,
right at that breaking point
points on the futures. So I mean, it's literally sandwiched right between the 50 and 200, with the 50 being under the 200.
So we haven't had a double. No, we did. That was the double, right?
Double
that
what?
Was the second time hitting the 200?
The double top.
Yeah. Was that second time hitting the 200?
Yeah. We've hit it and traded above it. And let's see, it was March 25th. But it's still a lower high from that previous time. So.
Okay. Interesting. For you chartists out there, as they like to call them. Let's go and basically this is a good point. Counterpoint is now your last thing here was bubble, toil and trouble. So go ahead and tell me about these very important stocks, Palantir and HIMS. Daniel.
Yeah, Darin. So they're kind of like the only stocks that matter. Unlike you think the other 493 matter or something like that. I don't know if
depends on what your problem is.
You think you're Warren Buffett, like a value investor or something? Right. So us cool kids, all we trade is high beta. For people that don't know what high beta means, it means that it has when the market moves 1%, let's say, these stock move 3 to 6%, right? So think of your Palantirs, your HIMS, and these, if you follow them, have all been ripping to the upside, and apparently most of their volume, which is pretty high, is actually traded from 0 date options, which is like the most gambling form of trading possible. But all of them have stretched into the overbought and obviously overvalued. I mean, they're probably overvalued before they're even trading this high level. Right. So, once again, and to be fair, these high beta stocks make up a very small percentage of the stocks that Royce would probably be talking about. And honestly, these ones are the few that are already well above that range. So, this is another one of those indicators of kind of like bear market activity. But you also are seeing small caps haven't moved once again. I mean, I feel like small caps have been a dog for like 3 years, but they also are just getting no volume on the transactions they are getting. But so I do hope, for the sake of my IRA, that Royce is correct.
Yes. You can bet on that. You can take that to the bank.
Well, trust me, my money's in that bet.
You can take it.
It wrote it down. I'm hoping it's ready to ride it
back up. Looks like
as long as the banks, banks and CRE and real estate. We've talked about that. Those are the only things that might blow things up. So let's go on to bringing out the crayons. Royce, this is you. Let me put the little title screen up here. It's Crayons and Charts After the Bell with Royce Wells.
Excellent. All right, let's go take a look at Lululemon.
Oh boy, Daniel, you're smiling big. I can't see your face.
All right, let me turn on my arbitrage band. All right.
See how Daniel's face just lit up.
Yeah, exactly.
I smiled because Darin was talking smack. Okay.
He's like,
right,
I'm Lulu's.
He stands up. You probably see he's wearing the men's Lulu's.
I only own one thing of Lululemon. Okay, jeez, relax.
Can't go anywhere with you guys. Not at all. All right. So let me turn on my danger zone and all that craziness too on this guy. All right. So what's going on? So Lululemon is also in that number. Can you guys see my screen?
It's at the bottom.
All right. Look at this guy. So we see that the RSI line is quite literally buried in the bottom of the trench on the daily time frame. So this guy over the summer will more than likely rise, and he just needs to get past the 280.22 point. So, and also notice that Z Pro is basically just trying to break over the dash green line, which means there's actually a probability of this actually succeeding instead of being deflected. In previous times, I basically got close. As you can see over here, it got overbought, and because it got overbought, it didn't let the Z Pro actually get up there, and it basically fell back down. It moved too far, too fast. So from where we are and where we're going on the daily time frame, Lululemon is set up beautifully to follow through for the rest of the year. It may run into a little trouble around 323.72. If I move up to my weekly time frame, we do see that basically this guy did get oversold last week. We have a doji candle this week, and notice that these candles are about to collide with that parabolic SAR. So anytime the candles touch the dots from the parabolic SAR, the trend changes and it pushes us back up. So I mean, there's a very good chance that we're going to wind up back over 326 somewhere between now and the end of August. Looking at this guy on the monthly time frame, so basically right now he's very much so in the deep channel on the weekly time frame, but he's trying to pull himself up. He needs to be able to continue that momentum. Looking at this guy on the monthly time frame, basically, yes, they've had horrible all the way from 424 all the way down to 234. That was almost a $200 fall. It's trying to pick itself back up. So if you're at the eye of the storm, which is exactly what this is on the daily time frame, you might be in for a nice ride to the upside. That's all I got for you guys now. We'll see you next time.
All right, that's After the Bell, Crayons and Charts with Royce Wells. I did see at the very bottom there, Royce, that yellow was about to turn into green at the bottom there too.
Yep.
Here now, let's get everybody's faces here. All right, we got all four of us.
I want to know how bad does Nike look relative to Lululemon?
Don't talk about my son's company. All right, we're gonna go back here.
We're not talking about that guy. Oh look, same chart.
It's almost like it's algorithmic and planned.
All right, like I said, there are over 5,400 stocks that are in this position currently, and no one sees it except us.
And then at the bottom, Royce, it's the same spot in the yellow about to turn to green at the midpoint there. That's
exactly.
Great. All right,
let's
go.
Fun part.
The fun part, yeah, he's rushing it. He's rushing.
Oh no, I'm losing connection.
Yeah, I'm glad everybody came in. Hey, let's make sure we. Okay. Now I heard his name is Putin. He's a Russian bank because he's trying to rush. He's rushing this part of the show. All right, that was bad. There's a terrible setup.
That was tough, Darin. That was tough.
So Josh,
It was, yeah.
All right, I'll pull up the scoreboard just to hide my face for after that. The scoreboard. Josh was the winner.
You're not even on the scoreboard. You don't have to hide anything.
Yeah, you know what I need to do? I need to crop it so that my name's not even on this scoreboard. Then it won't even look like I'm just the host.
It's not like it's been almost a 15-week run since you scored once, right?
I'm the host.
Savage.
I wish you weren't my boss, or I'd point out that you only have one. But I wouldn't do that because you are my boss. So.
Oh, I appreciate it.
All right, let's talk apes, which is the only positive thing for me. Apes 6, and then the quantitudes are at 5. Josh now decides he wants to win every other week. It looks like. So he did the 3 in a row. Then he go, that was kind of boring. I'll just do one every other week now. So he's at 6. Daniel is at 4. Royce is at 1, and Darin's a good cheerleader. So let's move back to, and that was on EXP.
Please, no,
that was on EXP.
We did do Lululemon, so hey.
Yes. All right, so Josh, what is your amazing pick you're going to pick this week that I can win with?
Well, in honor of Bitcoin trying to creep up near this 100K threshold again, let's do Mara.
I saw that coming.
Oh wow. Is it being volatile again? What's going on? It's always volatile. Mara Holdings.
Chart look familiar?
Well, at the bottom it's different. It bounced up over it, and now it's
already over. So it's leading the chart.
Exactly.
Right?
Exactly.
So that means crypto is technically leading the market rally this time instead of technology. That's something also to take note of.
Okay.
All right. So on this, we have about an $11 all the way to about 16 at the very top. So 11 to 16. Let's do that.
16 for each.
$5.
$5 difference.
It's a $5 spread. Yeah. So you can do about $1.25 if you want, or I can trim it and make it 12 to 15, or 11 to 15. I don't know. 11 to 15.
You could do $4 and we each get $1. I mean,
let's do that.
All right, so 11 to 15.
11 to 15. Test your might.
All right. I will say that I see. No, I shouldn't say it unless I get to go
Joshua
second.
Wins.
Josh, go.
So you said, all right, so we get $1 each.
Mm-hmm.
Do 13.
13 to 14?
13 to 14. Okay.
No. 12 to 13.
12 to 13.
Yeah.
12 to 13. So it's not in your range right now. Okay.
Wait, hang on. No, start. No, wait. I'm being dumb. Hang on just one second.
Oh, hey. No take backs.
That's right.
Yes.
You took your finger off the piece.
Bus, brother. You get ran over by the wheels.
I'm thinking literally, like in my brain, I'm thinking like literally the $13. So 13 to 14. Okay.
13 to 14. That's okay. Final answer.
Yes, sorry. Yes, thank you.
I still say Royce, he took his finger off the token. I mean, it was great what he did. He should have had all the chances in the world as long as he picks me next.
Just yell Jumanji and run.
That's right.
All right, who goes next, Josh?
I mean, I'm gonna let Darin go, so it eliminates a couple of answers for you guys.
There you go.
Oh, thanks
Good
a lot
answer.
for that.
Good answer.
No, I mean it helps your odds because you know he's going to be wrong.
Oh yeah, for sure.
Well, there you go. Thanks so much.
Well, you know what?
Wow.
All right, +1, Josh. There we go.
Wow. That's if you're a teammate, who needs enemies?
Enemy's friend is my friend.
Yeah, frenemy. Well, I see it bouncing off that midline right there, that RSI, an immediate red SAR dots forming, and well, I got the 12 to 13.
Hey.
He's not watching.
I didn't see anything, no, because I don't have that up on my screen. What you guys are doing behind the screen, which is kind of scary that you guys are left alone in there. But yeah, I've got 12 to 13 then. So who's next? JPM. And I don't like the fact that he's smiling and doing his little evil laugh again. So go ahead. Who's next?
Okay, Daniel.
I'll do the upper range.
You're not getting stuck with anything. He doesn't want you to win another week, so he's making sure that.
All right, Daniel's got the top then, and Royce has got the bottom.
Wasn't this last week?
I think so. Yeah. We covered the middle, and you guys had the outers.
So what do I have? 15 and up, more or less.
Yes.
14.
No, 14 and up. 14 and up. Yeah.
14 and up. Okay.
Yep.
Mhm.
Yep.
And
All right, guys.
You're in.
I hope.
We'll remember this. We will remember this. I show you an uptrend, and this is what you do for me. All right.
I hope. See, I'm your friend. I didn't go for the upper end. I could have, but I went to just below.
I'm sure if you would have went to it, then the market would have reversed and given you your bear market like you said it would.
I believe you. Exactly what you're saying. Yes, 100%. I'm tied into what I say ties into the algorithms. It's the anti whatever is going to happen. All right.
Are you related to Jim Cramer?
I
Just
must be. Must be. Bye. All right.
He is Fred.
Dude, he is Kramer.
Damn.
Except I don't get paid on the side through Bitcoin or crypto to say what I say on TV. No, he wouldn't do that.
No.
Just kidding, Jimmy.
No comment.
Just kidding, Jimmy. All right, guys, thanks for taking time out to make this fun and entertaining. And hopefully we'll get some good news over the weekend. I think that's what we're all waiting on. And then I'm sure we will be talking about whatever was said this weekend and whatever came out of Sweden, all of that together next Wednesday on Arbitrage After the Bell. Say bye.
Bye.
So.
You're not
that wasn't financial advice.
Bye.
No, I'm sailing away. That's what I said. Sailing.
Come sail away. It is karaoke night. All right.
It is.
Seriously, this time. Bye.